Well, the Nvidia earnings are out, and I'm pleased to say that they were fairly incredible. There are some considerations that we want to take into account. I'll pull up the numbers, and I'll also talk about the earnings call and talk about the questions that were being asked and sort of the spirit of those questions that were being asked and what that translates to in terms of price action for Nvidia, at least my take on it. So pulling up the press release, we have a few things to go over here that are going to be important to detail. So first of all, 39.3 billion, when this was supposed to come in around 37.5 billion, up 12%. Now, mind you, 12% is great because it was only 7% that was expected. And so that's one of the things allowing the stock price that we see to stay afloat as much as it is right now. If that came in close to that 7%, or if it came in under that 7%, we would see probably a fairly red day coming in for us. And now, mind you, we also have to get into some of that guidance that's coming up as well. So when we move down here into what we see for some of the guidance that comes on this. So we have a $43 billion plus or minus 2%. Well, we just saw a 12% quarter over quarter gain. This is another 10%. Now, mind you, they were projecting 7 and got 12. Now they're projecting 10. Will they get 12 plus? Will it be something closer to that 10? Well, some things that we heard Jensen say was that right now they are still moving towards that full ramp for Blackwell. And then in the second half of the year, we get Blackwell Ultra. So sometime July forward from there is when we start to get Blackwell Ultra. And they said that they expect fewer hiccups to happen with Blackwell Ultra rollout than what we saw from the Blackwell rollout, because it's not really a change as far as NVLink goes, that you just take Blackwell out and you put Blackwell Ultra in and you should be good to go. So they expect it to be smoother there. And then also when we look at the margins, what they have for the margins, this is something else that I find probably a little bit concerning to the price action, was they talked about having for the full year, 75.5%. And we go back up here and we look at the gross margins for Q4, 73.5%. Well, if you look at the projection forward, now it's down to 71-ish%. Well, that's another thing that's concerning. So now, mind you, during the earnings call, they said that most likely the margin will return back to the mid 70s later in the year. Once they reach that full ramp that they're in right now is something that's going to push down on the gross margin that they experience. It's going to put downward pressure on it. We're going to see it in the low 70s instead. Now, mind you, coming in and beating that could be a good thing. So we actually have really good news, but also some mixed results. We've somewhat answered the growth question, so you see some levity in the price action in the pre-market hours this morning. And so there's a lot to be excited about here. The tax rate bumped up a little bit. It was 16% plus or minus 1, and now it's 17% plus or minus 1 for that effective tax rate. So that also climbing up there as well. And so honestly, it's a really good earnings report, and you would expect such a thing from a company like Nvidia that's just been a rock star at coming in and beating those sort of expectations. And that's why in my initial projection that I put out, I had that 2% beat to the upside, because they tend to beat to the upside, and we didn't really have a lot of indications that it was going to be the counter to that, and yet it was still up above what I had pretty darn well from there. It was about another billion on top of what I had. I was coming in around 38 billion, came in around 39 billion. And so let's bring that down, and we'll start talking about what we could see for the price action from there. Now, mind you, we also have the GTC conference coming up in March as a catalyst. And I will say, just real quick before we get into the charts, Jensen referred to that a couple times. He's like, go to that conference, check out that conference. And that leads me to the tone of the earnings call, and not so much Jensen's tone, although I'll address that. It's more the tone of the investors that were the ones asking the questions, that everything just seemed, instead of celebratory, just a little bit doubtful. And I think that's a big thing that you see translating into the price action so far. And now, mind you, we don't have a full day's trading yet. We didn't even have the regular trading hours happen yet. But some of that euphoria that you heard in previous quarters, and some of that celebration, a celebratory tone, that excitement that we saw that led to a lot of momentous climbs, it was absent this time. And so what you had Jensen doing was playing defense. And now, mind you, I think long view, I think he's right that we are in the early stages. And I think that we're running into a human limitation here when it comes to understanding what's coming up ahead of us. So for somebody like Jensen, who's like right in the midst of all of it, who has everybody working at the company he has several direct reports that go to him. It's historically a very flat company, bureaucratically speaking. They're coming in, they're talking to him, and he has that long view, that long vision of it. Well, from a human development standpoint, just think about it in terms of when we have linear price action, for example, or that we think about linear growth, we can understand things like making $40 per hour or $100 per hour. We can easily calculate that. We can picture it in our brains, and we can understand just how that's going to play out over time. Well, compare that to what Warren Buffett says about compound interest, that it's an exponential climb and it has the biggest gains on the long tail end of things. Well, I think that that's more where we're at right now, is that Jensen's trying to tell people that, hey, we're at the beginning. We haven't felt the long tail effects of this yet. This is huge. This is incredible. And we're just at the beginning of it. There's going to be more demand for more power over time. And Nvidia is positioned to deliver the products and services that it's going to take in order to keep on expanding upon AI as it stands right now. So for him, I think that he sounds a little bit more like Jerome Powell, who, if you watch what he says on the Federal Open Market Committee meetings, he sounds like he's just like, man, I've answered this already. I've answered this 1,000 times. Now, mind you, I think that Jensen sounds a little bit less defensive than what Jerome Powell sounds like. But being in that defensive position, what that does is it can explain some of the more muted movements that we might happen to see. So maybe things do move drastically from here. We didn't get a strong enough beat on growth, especially forward looking, to see this thing skyrocket based off the results that we got. But we did get growth, so we didn't miss on growth. And so that's something that causes the stock price not to tank either. And so I think that, we need some questions answered, and March might be that catalyst that we have coming out. And hopefully his push to get people to go to GTC, to pay attention to that, because he can't really reveal anything now that might happen at that conference, or then maybe he's not going to during an earnings call because it's not the right place. That would be maybe where we get that next big thing. If they're on that 1 year rollout cycle, what does that next thing look like? And is it that next paradigm shift movement where it's so obvious that there's going to be just more capital being thrown at this over time? Now, mind you, I think it needs to be spelled out very clearly. I don't know at this point in time if it takes that the results to come out first. So I think that part we're just going to have to watch and see. They did tell us that 2025 is supposed to be an excellent year with that return to mid 70s on a gross margin basis. All right, so let's get over into the charts itself. So I said yesterday, beat on growth, miss on growth. And it's funny because, I had a comment. If you go back and watch that previous video, somebody said about $75 and you must feel stupid now. Well, no, because it's in line with what I said. They didn't miss on growth. They didn't come in below that 7%. They came in at 12%. That's a beat on growth that could put us up into this area up here. Now, mind you, that's a simplification. They did beat on growth, but is it that thing that pushes us up and over? Well, from a technical standpoint, in the pre-market hours, we are flirting with the 50-period moving average, which is at 134.06. Pre-market right now, we're at 134.53. So not bad shape. Maybe we're answering some of that question. Staying up above the 200 is bullish. Staying up above the 50 is bullish. We want to get that trading day in to see what happens for us. Don't be surprised if one of two things happen. One, that we continue to stay in this chop type area. Now, mind you, if you look right around where my cursor is right here, if you look before, when we had some doubts going on, we were down below that line, which is where Nvidia closed yesterday before their earnings were reported. And if you look after that to this area of chop that I have circled right here, we were sitting on top of that line, and that ended up being, well, resistance, because we're coming up from it from the bottom of it. So I said that most likely leading into earnings that we would be pretty mixed. And I said up in this area of chop potentially, or between the 50 and the 20. We ended up being right in between the 50, the 20, and the 200. They're squeezing on each other right now. We need to get back up on top of this line. We want to stay up above there. We don't want to fall down below to find that other area of uncertainty there. Now, mind you, there's also the market bias to pay attention to. If the market does happen to sell off, and I'll talk about SPY, QQQ, and IWM as well, especially the S&P, NASDAQ 100, if they compress multiples, Nvidia's multiples are also going to compress. So it doesn't entirely matter what Nvidia does as a company. Right now, the multiples are a little bit high, especially given the growth that they're experiencing right now, which is a little bit more the reason why you have the chop that's taking place. But if those multiples get compressed by the rest of the market, today's kind of a nice day so far, but if those multiples do get compressed, regardless of that growth story that we're seeing right now, as from what we currently know, Nvidia's likely going to sell down anyway, and maybe we even get a little bit of a death cross. Now, what do I think of a death cross scenario? I think that would be a buying opportunity for myself. So for me, I would buy that dip. I would buy that hands down. I actually would love to see cheaper Nvidia stock because I believe in that long-term growth of the company, and I do have a very, very intimate knowledge of what it means to have that sort of compounding to come in, that nonlinear growth, that exponential growth that I think is likely coming our way. So I still hold that belief, and that's why I hold my position in Nvidia, and I wouldn't even sweat things. If we had $75 Nvidia, I would think that would be incredible, even though some people, especially if they're in margin right now, kind of a crazy time to be in margin, but if they were in margin, yeah, that could be very scary to see the price head down that way. It wouldn't be 50%, but it would be super painful to watch. But if you have the capital ready to deploy, to me, that would be that sort of opportunity. But again, once again, we didn't get the miss on growth. I'm going to delete that off right here on this video so you can watch it happen. I don't know that we make it down there. Even if we do get that sort of death cross scenario, I think that we could look at longer term moving averages, and you could see even down here at about 120 is where we have that 50-week moving average, and we're overall in longer term bullish positions for Nvidia. That even if we are in a time where we have that near term pullback for Nvidia prices, or the market itself pulls back, to me, this would be a stock where I would look for that opportunity because I think it is going to have that return over time that's going to be wildly successful and outperforming if we get that sort of pullback on it. So we do want to watch it and see what happens at their upcoming conference in March. And so that is a catalyst for us that we want to pay attention to. And if that excitement is revitalized, that's where you can start to see that price action come in. Right now, while I still think that there's a lot of institutions and investors, especially the larger institutions, I should say, that really want a lot more certainty, and they're just not getting it right now in the results or in the guidance. I think it's going to subdue the price action just a little bit. I think it's going to make it harder to hit these numbers. Now, if the market instead decides to recover and we end up going flipping bullish or continuing that bull run, and this is just a little bit of a bear trap, if you will, where the markets are selling down, if we see multiples increase in the markets, well, that's the rising tide raising all ships, or however the saying goes, and Nvidia is going to benefit from that. Maybe we see some new all-time highs coming in, and so a lot of this is overall market dependent because of the way that it does affect multiples. But if we're somewhere near where we're at right now, we could actually see a fairly good still 2025 market-wise, stock-wise for Nvidia fill out for us over time. So with that said, let me get over to SPY just to tell you a little bit more about the market bias and what we're seeing right now. Keep in mind that on weekly and monthly charts, we do have bearish divergence with the momentum that we see as per the RSI on those charts. And for the daily chart that we have going on right now, we're down below the 50. We got rejected yesterday off the 50. We need to make it back up above the 50. And then after that, we need to make it back up above the 20. And so that's a little bit of what we need to see. And furthermore, this previous peak where we peekaboo just a little bit and put in a new all-time high, 609.83 is that number that I kept talking about. And so that's the number that you want to keep watching. We need to make it back up there. It starts with the moving averages. If we get rejected off those moving averages, then watch for that sort of that sell that could follow from that. And there could be any number of catalysts that go with that. So tomorrow's inflation report, the jobs numbers coming out, especially with Doge doing all the cuts that they are. How does that affect all the government hiring that has kept the labor market numbers somewhat afloat over time? Is that something that's going to start to be infringed upon? Are we going to find a weakness uncovered? So that's some of the doubt that we see and some of the questions that we see and why we don't see euphoria, in my opinion, in the markets right now. I talked about the 4 pillars that I have for seeing, especially where IWM is concerned, to see the markets really rally. So we need the high GDP, we need low inflation, we need stable unemployment, we need easy monetary policy. If all 4 of those can go lock in step and hit together all at the same time, this market's going to go crazy. So if we have some near-term pain before that happens, that's also something to pay attention to. When does that moment happen for us? Because when it does, I think we're going to hit that next big wave that's going to push us up to the new euphoric heights beyond what we have right now. So QQQ, much the same as what I said for for SPY, tracking the NASDAQ 100 here. We did not make it back up to the 50-day. Let me put the EMAs up here just for a moment. Yeah, we were even down below the 50 EMA. We almost retested the 5 EMA. So the fact that our moving averages are starting to, or that our candles are starting to dangle off the moving averages, that could be a near-term bearish sign. Keep in mind, I don't want to sound like a major bear here. What this is just talk about near-term movements of the markets that we see. We're still up above the 200 days. We're up above 50 and 200 weeks. Like, we're still in bullish territory. So even though we are in bullish territory, doesn't mean that there's not going to be dips and pullbacks along the way. But really, depending on how deep of a cut we get, really starts to determine, okay, well, when's that next big rally going to take place? Well, then you want to start looking at the longer term moving averages, such as the 50 or even the 200 week or month moving averages, because those can be huge areas for bouncing. So recovering from where they're at right now. But in the near term, what we're looking for is the 50-day for the S&P, for the NASDAQ 100. And I'll just wrap things up here with IWM, and then I'll summarize and I'll let you guys go. Thank you very much if you stuck around this long. IWM is in rougher shape for right now. So those 4 pillars that I talked about, Nvidia earnings not totally helping out what we see here. Now, mind you, I do think that Nvidia earnings are helping the overall market because it doesn't spell weakness. It doesn't spell collapse for AI. There's still some questions that are out there. So it's not the doom and gloom story that could have happened. So some of that fear and uncertainty and doubt has been cleared up. We see some levity come back to the markets. I think Nvidia helped. So for IWM, got a heck of a rejection yesterday off the 200-day. This puts us in near-term bearish territory with some buying pressure down here. And you can see before that we were down in this territory. And that's also where we found buying pressure going back to the middle of January. So January 13th, and definitely darn near that when we go back to October of 2024, that we're still in that territory right now where there is that support. There's historic evidence of that support. We do have, if you look at some of these candles that are up here above the pre-market bar, that's right where my cursor is right now. We're going to start just getting into a little bit of chop, most likely getting back on top the 200-day for IWM. Absolutely huge. So guys, if you want to see more of what I have to offer, see my buys and sells, see my technicals, such as on Palantir, where I said where we're going to find that bounce by filling the gap. You guys can do that by finding a link for the Patreon down in the description. Click on that, sign up, and head on over to the Discord where I post everything for that. And then if you want to learn to do technical analysis yourself, there's a link for Stockmo Academy. You can also get access to the bread recipe trading strategy that I personally used since Stockmo developed it, shared it with me, and that's covered in that technical analysis course. There's even a learning community that goes along with it where you can ask your nuanced questions about technical analysis, about the bread recipe, and you guys can get that course cheaper using the code REDOCTOR, DOCTOR. So let me wrap things up here for you. So for Nvidia, we're still in pretty good shape. At least in the near term, I have no reason to doubt my bullish position that I have on Nvidia. Can't give financial advice to you, but it does justify where I'm at right now. For myself, you can go back and rewatch this video, and you can look at those points that I've made. You can add to those points. You can contest those points, whatever it is that you want to do. I still remain bullish on Nvidia. These earnings were pretty darn good. They weren't great to the point where it brings that euphoria back. And so we're looking at that next quarter. We want to see that return of the margins, and we want to see that continued growth, hopefully accelerating beyond that 12%, especially to justify the higher multiples for Nvidia that it could potentially be trading at. And don't forget that where we're trading at right now is with the market having sold down like it has. So even that, in the face of all that selling pressure, to be performing as well as it is still a very good thing for us. We want to stay above the 200-day on Nvidia. And if it doesn't happen to stay above the 200-day, we need to be prepared for that as well, especially if we retest and reject on it. That could bring some near-term pain. And in my opinion, for myself, could bring along some buying opportunities that I would certainly take advantage of. And then for the markets, watch those moving averages. Need to get back up on top. The 50 and the 20, if it's the S&P or the NASDAQ, got to get back on top of the 200-day for IWM to see those higher climbs come back to it. And I talked about those 4 pillars. Write them down if you need to. We need the high GDP numbers. We need to have stable unemployment. We need to have low inflation and easy monetary policy. And that's really going to bring that euphoria back to the markets. Guys, thanks for watching. Check out those links in the description to support the channel. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.